Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in. All right, we're back. Donovan Reese with MyRentDoor. I appreciate you being here, man. Let's spin this one a little bit. Let's talk about, to our agent partners, and let's talk to them a little bit about the current state of the rental market, which I think is like significantly under discussed in our industry. Like typically what everybody's talking about is the state of the market and interest rates and all of that. But I'm going to hit you with a question about like the current state of our market in, the rental market is, we talked in our long podcast, we talked about, the quality of the tenant and in treating that tenant in a way that they're going to stay in the property. But, I think what's been interesting about this particular market is that interest rates are so high that now this barrier of entry for people to buy a home is actually, the ceiling's been raised, right? And it's put a lot of people in a situation where they've got to rent, right? They've got to rent a property. And maybe like you can speak to this, but like one thing I noticed was that I thought rental rates were going to like skyrocket this last year as a result of interest rates going up and putting more buyers on the sidelines. But I couldn't be more wrong. Like I couldn't be more wrong. So what do you think that is? I mean, why do you think that's happening?
I think before I answer that, I think this last 6 months has probably been the roughest 6 months of my real estate management career. It has been ice cold. All my markets across the country, it has been absolutely brutal. It's starting to warm up here. We're starting to get some traction now, so it's starting to improve. I kind of thought the same thing. Maybe not skyrocket, but continued increase there due to that. But what you're seeing, and again, we referenced that in the other podcast about, the Zillow report is, affordability. And you look through that report and, I don't remember the numbers, I'm going to make them up, but something like 80% or something of, renters were choosing to stay where they were at because they just couldn't afford to move, right? Moving's expensive. Yeah. Moving sucks. I hate it. Everyone hates it. So where renters, we're more inclined to jump ship and go somewhere else, they're really hunkering down. So you're just not seeing, the traffic that you were before. But yeah, it's been rough.
Yeah, definitely rough. So, I mean, do you think that comes down to like, my opinion is I think it's like affordability. I think that, the same borrower that would purchase a home and can't afford this new mortgage rate is the same type of person that has to rent a home, but they also have to be conscious of what they're going to pay in rent. And I think for a long time, what we figured out is like that maybe rents across the country were just kind of below market. Like I'd always heard that it was cheaper to rent than it is to buy. And it's actually the inverse now, right? It's now cheaper. Well, it is a little bit cheaper to rent than it is to buy. But, I guess what I'm trying to say is like, that if you are out there and you're looking for a rental product, they're not cheap.
No.
They're not cheap. And pricing has seemed to have gotten to a place where it's matched the current affordability in the markets. Does that make sense?
Mm-hmm. Yeah, I mean, you certainly saw a record number of price decreases here this last year. So it's been, part of the challenge that we've encountered is, we have to keep rents at certain rates in order for these refinances to go through. And, so, we can't just drop rents to fill properties. So then you got to get really creative, so you're seeing a lot, of concessions and some pretty creative ones. I mean, we've got one where we'll move you.
Right.
we'll get the moving truck, we'll get the movers, we'll set everything up, and we'll send you to DC Steakhouse.
Yeah.
And so you just never saw, that kind of incentives or, anything. So you're seeing a lot of concessions right now, a lot of price decreases. But, the biggest thing is, we've been through enough cycles here, and, just even, 2020 buying or selling or renting, and, like, you just throw the house on the market and it could be, you don't even clean it out and you got multiple offers. Right. And so, one thing I said when the interest rates went up and everyone started getting concerned, and I said, look, just make sure you have good product. You got to put a good, clean house on the market, make sure it shows that it's maintained, it's cleaned. And then, price it right. Cause there's always a market for good homes. Yeah. It's where you really see people struggling now is, in those B or C or below assets, and because the owner just won't fix them up, right? So we're very, very big on putting good product on the market. We work with our clients to make sure that that they're in great shape, everything's working, it's cleaned, it's pest controlled, and everything to make sure. So it really helps us continue to to find good renters, and we're able to. Again, we don't charge any fees to our renters, so we're able to keep rents higher without it, negatively impacting, the renter as much either. So
yeah, that's interesting. When I think about these tenants and like their perspective, as a tenant out there, I think like you're right. You got to put yourself in the shoes of somebody that's potentially looking at one of these rental properties and go, look, I could rent this property for $2,000 a month, or I could buy a property and I would pay $2,400 a month, right, for maybe a similar property, similar mortgage. And the decision probably really comes down to then quality of product. Like, is the product right? And is this product, like, am I willing to raise my family in this particular home? Or am I just living here out of like necessity or need? So I think, we've seen a big shift in the rental market. The last 2 or 3 years has been an interesting shift, to say the least. But, I think to your point now, at least from where we're sitting, is we're seeing a lot more activity from tenant activity in the market, which, could just be now that people are just finally ready to move on, right? They were almost sheltered in place, just like the people locked into their 2% mortgages where they're going, man, I don't want to trade away this mortgage, but now I have to, right? And there's just time ends up just kind of becoming the need, and they've got to start moving. So maybe that's part of the reason too.
Yeah, I think part of it. I mean, we're technically overbuilt in Phoenix right now, especially on the multifamily side. And so, again, people are able to take advantage of, concessions, and a lot of people are, trying to create better resident experiences. And I'm all for that. I just have an issue with the packages. And so, you can move and get 2 months free, and, and so it makes it easier, but, you're still going to see a lot of people hunkered down this year. Yeah. It's definitely gotten better, but it's only because it was just so bad. Right. So it's still slow. Yeah. And I anticipate it to be moderate all year. Right. I don't think it'll get crazy this year. I don't think you'll see a lot of price increases. Unless you're doing Section 8, we should talk. Yeah. So yeah, I mean, I think it's going to be another year of both sides trying to figure out, how to keep bunker down there. Yeah. So don't worry about rental prices skyrocketing this year, I guess, is the moral of the story. I mean, I've been wrong before, but I don't see it happening. Not this time. Awesome, man. Well, I appreciate you giving these guys a little insight to that. Thanks. Yeah, absolutely. My pleasure. Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.